Welcome to the Trading Lounge, and here we're looking at the daily chart for the ASX 200, and you can see quite clearly here that we're tracking a five-wave sequence to the upside, which is this one here, and we were looking at this being wave 1 and 2 here, nice strong third wave here. We were looking for the fourth wave here, and the normal textbook thing is that if wave 2 is simple, then wave 4 will be complex. But that didn't seem to be the case. So when we were looking at this situation here, we were looking at this as being a, well, in simple terms, we were looking for an ABC correction like this. And this moved down through here. It counted reasonably well as five waves, the 1, the 2, the 3, the 4 and the 5, and if that's the case, then after an ABC correction to 61.8% or thereabouts, then we would get this leg down through here, and then we would get the move up from here. That's not the case. This move down through here has to be counted as this ABC, all sort of squashed up in through here, and this is how this would count in here as the ABC here. It would be an A and a B and a C for the A wave, then the B wave and the C wave. Now I chose to go the other way for that, but this is the way it is, and because we've got this stronger push up through here, we have to go this way, and that's fine too. So now we're looking at this particular structure through here. So we're looking up for wave 1 here and back for wave 2 here, and then the third wave here is still unfolding through here, and then we'll be looking for the fourth wave through here, and we'll be looking for a price somewhere up in, well, the 61.8% of the whole bear market that we had is 5,400. But let's just, for the time being now, let's just see how things extend. Anywhere from the 550 to the 5.3 would be acceptable. What we'll do is we will track the five-wave structure to the upside through here, and that's what we're doing on the ASX 200. This is how it looks through here at this stage here. So we're not at the top of this wave structure here just yet, but we can expect a correction across the 5.2 here. And just to point out that from this point here to this point here, a 38.2 retracement level brings us back in around the 5.1 through here. And that's certainly possible, because when we look at some of the other markets like the S&P 500, it's facing the 1600, and we follow the FTSE as well quite closely. So that's done its five waves up to the 6500, which is a medium level. So there's a few reasons there that that we can get a reasonable correction at the 5.2 through here. Just looking at that on a smaller scale through here, just to, on the 1 hour chart, just to bring in the picture just through here, we're looking at, well, this is not the A wave now, this is wave 1 here, wave 2 back to here, and then we've got wave 1, wave 2, and we're looking for the top of wave 3 here, and we've been tracking this up here from wave 1, wave 2, and then 5 waves here, all the way up for 3, back for 4, and looking up for 5 here. One way or another, we're going to get some sort of correction here. As I say, the textbook 38.2 retracement can bring us back to 5.1 here. Let's just see how we go. Wednesday normally creates the high. Thursday is normally the bear day. If it's a bear day on lower volume, then it's a corrective move, and then we'll be moving up from that. So look, there is more scope to the upside. The banks are leading the way up there, as you know. When we look at the banking sector, the finance sector is XFJ, but we'll look at XXJ, which is the banking sector, and you can see that that's obviously leading the way up. But we understood that anyway. So what we're looking for here is a possible, this could be viewed as an A and a B and a C to here, but it can also, because of the strong move in here, we need to take this into consideration as well. This would suit banks like ANZ, where the Commonwealth Bank had its low from this point here. So it's a bit of a tricky one, but what we can do for the time being with the banks is simply look at this particular structure, and that would be up for 1 here, back for 2 here, and looking for the third up here, the fourth and the fifth up to here. Now that could just be the top of the third up there in terms of up for 1 here, back for 2 here, then the 5 waves up through to here for the top of the third, then the fourth, and then the fifth up to the 72 would be looking up there. Of course, the 7,000 is going to play a part in this as well. So when you look at Commonwealth Bank and ANZ, they've got a different basing point through here. So if we just have a look at that for a moment, because it's reasonably important, go through here. So you can see that with Commonwealth Bank here, we've got this structure like this here, so we don't have that little lump here that we had on the others. Commonwealth Bank came down further, so in this case we would be looking at this as 5 waves up to here in terms of 1, 2, 3, 4, 5 to here. So that would be up for 1 and back for 2 here, and then this is the third wave up through here. But when we look at some of the others like ANZ, perhaps, yep, you can see that this low here is higher than this one here. So I'm just not sure about if we take this as an A and a B and a C to here, and then up for 1 and back for 2, and then up for 3 in this particular case as such. Whichever way you look at it, we've still got this strong third wave. There will be profit taking here, and there will be further upside. So look, it's just, how you trade this is entirely up to yourselves. Longer term traders obviously would allow it to play out further to the upside. Short term traders need to navigate, so you need to work things out for yourself. There's no right or wrong way. You just choose the degree of structure and your exposure to the market, and you play it out, and that's that. The other markets, like I mentioned, the FTSE as such, this is just the DAX here. That's going to have problems at the 8,000, but I was more interested in looking at the FTSE for our market here. We can see that we've got up for 1, 2, 3, 4, 5 here, and we're at the medium level here, 6,500. So yeah, look, we just expect some sort of ABC correction here before we see further upside there. If we look at the US markets here as well, we're looking at this also move down through here on the 2-hour chart for the S&P 500. Dow's pretty much the same as an A and a B and a C through here, and we're looking for further upside through here as well. What I did want to point out too is that there's probably a couple of different ways to count this as well. But just looking at this in terms of the 1, the 2, and then the third wave up here in 5 waves, and then the fourth here, and then the fifth wave in 5 waves moving up through here. The fifth wave here should be the same, pretty much the same as wave 1 here. We can expect a wave 2 across here, and then further upside through here as well. So yes, we're just looking at this as being a larger picture to the upside, and let's see how we go with that. So we'll be looking up for wave 1, back for wave 2, and remember that wave 2 can pull back 50-60% of this structure here. So I think we just allow this to complete it into 1600 here. Let's just see what we get through here. It could be just a shallow retracement back into the support line through here, and then further upside from that point there. Yes, just while we're here as well, if we just take a look at the banks, this is the US banks here, and you can see that Morgan Chase here, JPs, haven't made new highs here yet, and we're looking at this same as our banks, an A and a B and a C here, very much like Combank, this little move here. So you can see that we've got 1, 2, and little 3 and 4 and B5 here, then a back, and then further to the upside. That's what we're looking. We're looking for these highs to come out. So in the US markets, there's still plenty of run there. We can see that the UBS here, for some particular reason that I'm not aware of at the moment, there was headline news there. I can't recall what it was at the moment, but the point from my point of view is that it's taken out its highs here already. Do you know what I mean? So that means that those other banks will follow. It just means that there's further upside. We can be looking at 20 up here for that, of course. the Bank of America as well. It's pretty much the same as the other guys. So up for 1, back for 2, and then further to the upside there as well. So just pointing out that the Dow and S&P has got a purpose to run higher, looking at the stocks and looking at our structure as well. Just going back to our structure as well, if we just have a look at the XJO again as well, you know, when you think of this 5-wave structure here, you know, normally the third wave is the longest and the strongest, and we can see that that length there is longer than this one here, but that would mean that there's 5 waves in this little structure here, so this one here could be the same size as that one there. That's kind of what we're looking at, really. The 5th wave can be shorter. We'll have to see how the volume relates, because normally the volume in the fifth wave here, the 1, 2, 3, 4, 5, the volume in this one here is normally less than the volume in wave 3 here. So you'll see divergence on, you know, the stochastics and RSIs and MACDs and all those sort of things that depend on their opening and closing prices and relationship to the previous one as well, and that's how they come there. But all those divergences come from the volume, so we'll be able to see that in there. But just for the look and the feel of the situation, we're looking at something like that there to complete there. So still a little way to go. The banks aren't if we have a look at the material sector, the XMJ, which is obviously the other side of the coin here in Australia, you know, we are looking at some sort of bounce off these lows here, the same for BHP and so forth, but they're not going to move that much. There's not going to be much of a lift in all of this, but there will be a lift. There's the commodities. Well, we looked at the commodities yesterday, didn't we? So but obviously there was no volume yesterday, so apologise about that. But I just want to have a look at the USB UBS commodity index here. Now this commodity index here takes up all of the commodities, so they're all in here. And what we have here from this high here, we do have 5 waves in there, and there's 5 waves in the third wave here as well. So that's how that fits. So we should be looking at 5-wave structures in here as well, and we can see that in this move down through here, we can see that this has got 5 waves in it through here, the 1, 2, 3, 4, 5, then we've got a retracement back up, and then we're looking at this other move down through here. So as we're looking through here, we can see that, you know, we've got this down for 1 here, back for 2 here, the down for the 3rd here, we're bouncing back for the 4th, and then down for the 5th in the commodities. So, you know, any rally in the commodities is really just coming off these lows here, you know, the bounce down here and so forth. But it still has another leg to play out through here. And, you know, also as well, this structure down through here in 3 waves, that would obviously work out to a larger structure like this one through here. So that's kind of where the commodity situation sits at the moment. So just pointing out that when the ASX 200 tops out in line, obviously driven by the banks, when that does top out, then this rally for commodities will finish, and then everything will just continue to the downside at that point. So we're not there yet, but all I'm pointing out is that obviously don't get too heavy on the material side of things. Of course, we can see some sharp bounces and so forth, but you know, you do what you will, just as long as you know what you're doing, that's all fine. Let's have a look at the commodities. Okay, just starting with the silver market today, you can see that whichever way you look at it, and you can count this in different ways as well, but whichever way that you look at it, you know, it is a bearish trend. And what we're actually seeing from the lows here, we are seeing some type of 3-wave correction through here, and that's the way that we'll treat it. We'll treat it as a corrective move. Sure, look, if it finds support on top of the medium level here, the 25, then we can look at it being bullish to some degree. Excuse me. the rally for the silver here. This is sort of how it pans out in terms of, we're just looking at, and this is the same for gold as well, a corrective pattern through here for the B wave, and then we're looking for the C wave to the upside. The C wave is always in 5 waves, so just doing our best to count this here in terms of the 1, the 2 through here. We can see that this is obviously the 3rd wave, and the 4th wave here is in a 3-wave pullback through here, and then we'd be looking for a 5th wave to make new highs here. This little wave through here does appear to be impulsive, so it is possible to put that there, but I won't do that for the time being, because that could also be up for wave 1 here and back for wave 2 and wave 3, 4 and 5 to get up through to here to complete that there. Okay, so what we could do though is we could say that a break 2400 here, as because it's tested low here on an ABC correction, if it finds the 2400 as the resistance, then there's a breakdown in this particular trend. So while it's above the 24, sure, it could spike down, but it can't find it as resistance through here. So we could end up with an A, some type of B, and a C wave here, and then up, but it shouldn't find the 2400 as resistance there. So if it does that, then it's bearish to the obviously bearish at the side. Now gold's much the same as well. You can see the same sort of pattern and shape through here as well. It's done a sharper rally back up through here, obviously, like for many fundamental reasons and financial reasons, of course. But once again, we're looking at the medium level through here. We're looking. So if we go and have a look at this, it's the same sort of pattern as the other one, as the silver we've just been looking at. Just extended a little bit more. So we've got the initial on the 1 hour here. We've got the initial A and B wave through here. Yes, it is a little bit tricky to count this through here as well, but I've just counted this up for wave 1 here and back for wave 2 here. So yeah, so the reason for that would be up for 1 and 2 into here, and then the 3 and the 4 to here, and the 5 to here. But it can be counted differently. But one of the main points here is that we've got this sort of stronger wave, longer wave through here, which we can see as a wave 3. And as I mentioned the other day, we had this 3-wave structure here, so that means that high would be taken out, and we can see that, and wave 4s can get complicated as well through here. But what we're seeing here is we're seeing the market being held within group 2 here, and while it's in group 2, then the market would remain positive. If it found group 2 as a resistance, then that would be the first sign of weakness, and then you would take actions to move out from that. But as long as that stays there, then we can expect a higher move into the 1500 here to the medium level through here. The copper market through here, just pointing out yesterday, there's a couple of ways to count this through here. We've got from this last structure down through here, we've got, these are new contract months as well now. So we've got the 1, the 2, the 3, the 4, and the 5 down through to here. So I was just looking at this being an A and a B and 5 waves for the C wave here. But as I pointed out yesterday, it does appear that we've got a little 5-wave structure here. So there is, as long as it stays above that that point there, then there's a chance that can go on top of the 320 there, and then move up from there. Now, also the main important point here, this can also be counted up for wave 1 here, and an A and a B and a C through here. If it found the 315 as resistance, then it's got more of a bearish tone to it. The important thing here is that we understood that the market would bounce around within group 1 from the 300 here. Now, if the of course, if the 330 found support, then we'd be looking at 350, because that's the top of group 1, and that's just how it pans out. However, we can see that the pivot within group 1, the 10, the 20 and the 30 here, the 20 here is really important too, in that becoming support or resistance. And we can see that that at this stage it hasn't tested it as support just yet. We can see that the range, that 320 is the balance line, the 15 and the 25 is the range. So we're just seeing it working out through here. At this stage, because it has moved up off the low here and it is swinging across here, normally we'd see that as a positive thing. And if that is the case, then it's got to prove it to us. And the next step is to get up there and develop support on that 320 there. Now, if that's the case, then we'll see this move higher from there. Don't jump the gun though, because this move down here could be bearish, and this would be just retesting the 320 from here and then moving down through here. So this is just another session, and we'll know the direction of this, and obviously that's going to cause BHP and material sector to rally higher, which we expecting some sort of rally. How far it will actually lift off is another point, but finding support on the 320 here is a really good starting point for that. It means that the 330 will be tested, and then if support is found on that, then we'll see the Rios and the BHPs even rally higher, which we'd expect them to do. They're just being a little bit sluggish, but they are getting there, and they can catch up as well. The oil market here, we were looking for we're looking for a rally, but we've got basically 5 waves up through here now. So we're counting this as up for 1 here, back for 2 here, and then the 3, the 4, and the 5 here. So what we can expect to see here is at least we just call this the A wave up through here. So we're looking for a B wave back. A B wave normally pulls back 61.8% of this. So, we can expect it to come back into this area through here in a 5-3-5 pattern here. So we're looking for basically an A wave here, a B wave here, and then a C wave further up. So we're looking for a structure here that would sort of have some sort of equality to the time and size of this one here. So that's how that will sort of play out there. So expect a bit of corrective activity in the oil stocks there as such. Alrighty, let's have a look at the FX as the US dollar is pulling down further, which is giving credence to the indices and the other commodities to continue rallying to the upside. With the US dollar here, we're looking at a ABC correction. That's the A wave, the B wave, and the C wave now. And we're looking at 5 waves within the C wave. That would leave us down for 1, back for 2. And then the third wave down through here in 5 waves, which unfolding now in terms of the 1, the 2, the 3, the 4, and the 5 down to here. Some sort of retest off the 81.50 as such, coming back to the wave 4, 1 lesser degree, or the 8200 here. And then down here for this here, and that should complete that. And then we'll see a larger move to the upside from there. This would be the opposite for the euro, of course. So when we're looking at the euro, this means that the 4-hour chart has changed. So what we can do from this particular low point down through here is on the 30-minute chart. We'll be counting this up for 1, back for 2, 3, 4, 5 for wave 1, back for wave 2 here. And then we're looking for wave 3 up through here. That wave 3 could be this little top in here, but I think that we should take that from the 1, the 2, the 3, the 4, and some sort of wave 4 going on here to the wave 5 up at the 132. But once that, whatever happens here, once that wave 3 is done, we'll be looking at a wave 4, and then we'll be looking at a wave 5 to the upside, which we would look at this larger corrective pattern as a wave A up through here. So we're looking at a 5-wave structure to the upside. This move here has already occurred through here. So if there is going to be another little push to here, then there's only going to be another correction through here. So it's going to take another session to to get another sort of setup for wave 4 to be completed one way or the other before we see a push to the upside. So if you're long, you can stay long there. We'll be looking up at 132.72 sort of area up there, which is pretty much the 161 extension up there. The Australian market dollar is slightly different. We've got a rally here as well, but we're looking at this as an A wave and a B wave. and a C wave up close to the 104. So if we pull that apart, that little structure there, this is how we see this coming up from the low through here. We've got a little A, B and C to make the A wave here, and that tells us that the market, this pattern up here, is corrective because of the three-wave structure, four-wave A here. B waves are always in three waves, so the A, the B and the C through here. I was expecting a little move down to take that low out there. The last time we spoke was 1, 2, 3, 4 and 5, but that didn't occur, but I think that's sitting in there. So I've labelled that wave 1 to here, wave 2 to here, looking at wave 3 to here, and very much like the Euro side here as well. So we'll take that as 1 and 2 and 3 and 4 and 5 here. So in this case we are expecting a top to come into play here at the 104. Now, it's just a little bit unclear this here. I mean, that wave 5 there and C can be sitting right there, so just be aware of that. So this could actually be wave 1 down to here, wave 2 to here, wave 3, 4 and 5 coming down through here. So you just need to be a little bit mindful of that, and that's where the copper market comes in too, at that 320 being support or resistance. So, and also the gold and so forth being, they're all drivers as well, making their highs as well. So just there can be a turn in the market here, and it may have already occurred as well. So just to be a little bit mindful of that. Of course, if this is 1 and 2 here, then the third wave will find the midpoint here, 50, as resistance. But you'd be looking for, if I can just draw this out for us here for a moment, if that is the case, that would be 1, 2, 3, 4 and 5, and then we'll get an A, B and C back up through here. Then we'll be looking at another scenario to the downside coming through here, and even further down. So that's what we're looking at. Just we'll get clarification on this in due course here, but yeah, if you need to get in earlier, then that's it. But as it stands at the moment, I mean, that little move down through here can be in 5 waves here, but it could just be the A wave, the B wave and the C wave, and then that's why the this structure in here. But this is the one that you'd be looking for over here, a nice clear 5 waves to the downside, a 3-wave retracement, and then the little 5 here, and then the 3 up here. So that's what you're sort of looking for as such, but it's always hard to get it perfect. But yeah, alrighty, well that's it. Generally speaking, that the banks are leading the way to the upside. The Australian banks are looking for a top of a third wave there. That would line up with the S&P 500, sort of struggling at the 1600 there. But once that correction's over, then they'll be further to the upside there. So longer-term traders can hold long. Shorter-term traders need to navigate wave 4 there. Alrighty, well, good morning and good luck.